A $300 million bet just got placed against silver investors, and the CME just told you exactly what's coming next. They raised margins 3 times in 10 days. But here's the thing, this wasn't random. 6 groups of accounts got caught red-handed manipulating silver. The exchange restricted them from opening new positions. And now physical silver is completely sold out while the price is crashing. Wait, how does that even make sense? Well, let me show you what's really going on here. Disclaimer. Just yesterday, silver got absolutely hammered with a 22% flash crash that sent shockwaves through the entire precious metals community. But this wasn't some natural market movement where investors woke up and decided they didn't like silver anymore. No, this was surgical. This was coordinated. This was an attack. The trading volume that morning hit 1.3 million ounces in a single session. Now, let me put that in perspective for you because the numbers here are absolutely insane. That volume represents nearly twice the entire global mine supply traded in just a few hours. Think about that. Almost 2 times what the entire planet digs out of the ground in a day, traded in one morning session. The Shanghai Futures Exchange didn't just sit back and watch this happen either. They flagged 6 groups of accounts for abnormal trading behavior. These weren't random retail traders panic selling. These were coordinated accounts moving in tandem, pushing concentrated short pressure with one goal: break the silver market. Someone out there was desperate, absolutely desperate, to force silver prices lower, and they pushed so hard that the exchange had to step in and stop them. And here's where we get confirmation that this was a deliberate attack on your investment. The Shanghai Futures Exchange came out and officially confirmed it. 6 groups of accounts violated trading rules by exceeding daily trading volume limits. The exchange didn't slap them on the wrist. They restricted these accounts from opening new positions. They got caught red-handed, trying to kill the silver rally, trying to shake you out of your position, trying to make you panic and sell. This is documented. This is official. This wasn't organic market action. This was manipulation, and they got caught. Now, let me introduce you to the villain in this story. His name is Bian Shiming, and he's a low-profile Chinese billionaire trader who previously made nearly $3 billion from bullish gold trades. So this guy knows what he's doing. And right now, he's placed the Shanghai Futures Exchange's largest net short bet on silver, worth about $300 million. That's the number we're putting on the thumbnail because this is the money betting against you. His position totals roughly 450 tons, or about 30,000 contracts of silver. While you're holding physical silver, believing in the long-term fundamentals, this billionaire is on the other side, betting that silver collapses. That recent price drop? It gave him paper gains. He's making money while your investment takes a hit. But here's where this story gets really interesting. And this is where the CME told you exactly what's coming next. Within 10 days, the CME raised margins 3 separate times. Let that sink in. 3 margin hikes in 10 days. And these weren't small adjustments. Maintenance margins increased 11% for gold futures and 20% for silver futures specifically. Now, why would they do this? Why make it more expensive to trade silver futures right after a massive crash? Because margin hikes make it more expensive and more difficult to maintain short positions. The CME is essentially making it harder for the big players to keep betting against silver. This isn't some random policy decision. The exchanges see the data we don't see. They see the positioning, they see the leverage, they see the risk building up in the system, and they're taking action to protect the market from another attack. What the CME is telling you with these 3 consecutive margin hikes is that they know the shorts are in trouble. They know that the paper market is stretched too thin. They know that another flash crash attempt could break the system, so they're making it more expensive to play that game. For silver investors holding physical metal, this is the exchange essentially saying, we've got your back because we know what's really happening here. Now here's where this entire situation becomes completely absurd. And this is the part that should make every silver investor smile. An Australian bullion dealer called Citigold just put out a notice. Retail sales temporarily paused due to global silver shortage. I'll read that again. Physical silver is sold out, completely sold out. One comment from the market perfectly captures this. Silver shortage everywhere. The physical is completely sold out. Prices are going to surge back above $100 once the short paper players run out of cards in their stacked decks. So let me make sure I understand this correctly. Silver just crashed 22% in a flash attack. The price got hammered down, and now there's no physical silver available to buy? How does that make any sense whatsoever? When prices crash, supply is supposed to flood the market. Sellers are supposed to come out of the woodwork. Physical metal should be everywhere, but instead, dealers are completely sold out and pausing sales due to shortages. That's not how a real market works. That's how a manipulated paper market works when it's completely disconnected from physical reality. And here's exactly why there's a shortage during a price crash. The paper to physical silver ratio stands at 408 to 1. For every 1 real physical ounce of silver that actually exists in a vault somewhere, there are 408 paper claims on silver. Annual silver production globally is worth only about $70 billion. Now do some simple math with me. If just 0.25% of paper silver holders decided they wanted physical delivery instead of cash settlement, it would wipe out an entire year of global silver production. Just a quarter of 1%. That's all it would take to expose this entire house of cards. So when Bian Ximing places his $300 million short bet, what's he actually betting on? He's betting on paper. He's betting that the price on a screen goes down. He's betting that other people panic and sell their paper positions. But you? If you're holding physical silver, you own the real thing. You own the actual metal. You own what the industrial users need. You own what the shorts would need to deliver if everyone demanded physical settlement. See the difference? He's playing with pixels on a screen while you're holding 99.9% pure silver in your hand. Drop a comment right now and let me know. Are you holding physical or paper? Because this difference is about to matter more than ever. The 408-to-1 ratio means the paper market is a complete scam, and physical shortages during a price crash prove it. Now let's talk about where we actually are in this market, because perspective matters tremendously. The last time silver traded near $65 per ounce was mid-December. Back then, the 14-day RSI was pushing 80 and sentiment was absolutely euphoric. Everyone was bullish. Everyone was buying. Everyone thought silver was going to the moon immediately. Today, we're at the same $65 price level, but the RSI sits around 30 and the world is panicking. Same exact price, completely opposite sentiment. Warren Buffett has a famous line, "Be greedy when others are fearful." Right now, weak hands are selling silver at $65 because they're scared. They're watching the charts crash. They're reading headlines about billionaires shorting the market. They're seeing 22% flash crashes and thinking I need to get out before it goes lower. But smart money? Smart money sees $65 with an RSI of 30 and thinks this is the opportunity. This is the reset. This is the shakeout. This is where conviction gets tested and weak hands transfer their physical silver to strong hands at gift prices. The sentiment has been completely washed out at the same price level that had everyone euphoric just weeks ago. Comment below if you're seeing this crash as fear or opportunity. I want to know where your head's at right now. So where do we go from here? Let's talk about what analysts are predicting, because this is where your conviction as a silver investor gets tested. The expectation is for a big move up toward the very end of February. But here's the reality check you need to hear. The shakeouts between now and then are going to be extreme, violent, tiring, and exhausting. The easy part of this rally, that run from $30 to $100, is behind us. That was the part where everyone made money. That was the part where you could buy silver and watch it go up almost every day. From now on, only investors with strong convictions are going to manage to stay in their positions. The rest, they're going to get tired. They're going to lose interest. They're going to see another flash crash and think, I can't take this anymore. And they're going to sell right before the next big run into spring 2026. The target after this recent sentiment reset is $300 per ounce. But the question you need to ask yourself right now is, are you strong hands or weak hands? Comment down below. Because the market is designed to shake out the weak hands before the real move happens. Let me connect all these dots for you so you can see the full picture of what is actually happening in the silver market right now. A Chinese billionaire places a $300 million short bet on silver. Then a coordinated flash crash attack happens, dropping the price 22% in hours. The Shanghai Exchange catches the manipulators and restricts their accounts. The CME responds by raising margins 3 times in 10 days, specifically targeting silver futures, making it harder for shorts to maintain their positions. Meanwhile, physical bullion dealers are running completely out of stock and pausing sales. The 408-to-1 paper to physical ratio is getting exposed in real time, as the disconnect between paper prices and physical availability becomes impossible to ignore. And we're sitting at the same $65 price that had an RSI of 80 in December, but now the RSI is around 30, showing fear instead of euphoria. The CME's message with those margin hikes is crystal clear. They're protecting the market against a squeeze. They see what's building. They see the short positions. They see the leverage. They see the physical shortage. And they're making it more expensive to bet against silver because they know what's coming. The shorts took their best shot with that flash crash. They coordinated. They pushed massive volume. They tried to break the market and shake everyone out. And they failed. The exchange stopped them. Margins got raised against them. And now they're trapped in a market where physical silver is sold out. Think about the position the shorts are in right now. They're betting on paper in a market where you can't even buy physical metal. They're short 450 tons, while dealers are pausing sales due to shortages. They're facing 3 consecutive margin hikes that make their positions more expensive to maintain every single week. They're under regulatory scrutiny after getting caught manipulating the market. And silver investors? They're holding the physical metal that the shorts would need if this paper market ever demands real delivery. The question isn't whether silver runs to $300. The fundamentals are screaming it. The supply shortage proves it. The manipulation attempts show how desperate the other side is. The CME's actions confirm that the exchange sees the squeeze building. The question is, will you still be holding your physical silver when it does? Will you be strong hands that weather these violent shakeouts? Or will you be weak hands that sell right before the spring 2026 run because you got tired and lost conviction? Because here's what I know. Every single piece of this puzzle points to the same conclusion. Physical silver is scarce. Paper silver is a 408 to 1 scam. Shorts are trapped. Exchanges are protecting against a squeeze. Sentiment has been reset from euphoria to fear at the same price level. And bullion dealers can't keep physical silver in stock even during a price crash. That's not bearish. That's the setup for the most explosive move silver investors have ever seen. The $300 million bet against you, it's on paper. Your silver, that's real. And when this paper market finally breaks, that difference is going to matter more than anything else. But what is your opinion on this? Comment down below. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, then turn on the notifications bell on this channel. Missing an important silver update might make you lose money, so don't risk it. Also, please share this video with as many people as possible. Let's get this news out there.